Welcome back. Still tuned to Halftime Report on CNBC TV18. Well, it's turning out to be a rough session for the markets. The India VIX, like we pointed out earlier, has also spiked up quite considerably today. So up around 10-odd%, giving you a sense in terms of the volatility or the anticipated volatility, which is expected currently up around 10% at 13.2. But let's talk about the deal activity, which has been positive. Q3 2024, in fact, has witnessed a notable surge in deal activity with 618 deals valued at $26.9 billion. M&A volumes reached a record high, witnessing 214 deals valued at $11.4 billion, 337 PE and VC deals worth $7.6 billion, and Q3 also saw 42 QIPs worth $6.5 billion. What's the way ahead? Sumeet Abrol, the partner at Grant Thornton Bharat, joins in now with his perspective. Sumeet, hi, welcome to the show. If you could just start by giving us a sense about what the deal activity is looking like in Q4, because we're coming from a really, big pedestal in terms of the M&A as well as the PE/VC deal activity. But is that going to continue into Q4? What's the pipeline looking like?
Thanks, Ekta, for having me on the show. And as you rightly pointed out, I think Q3 has seen a very significant surge after a rather subdued 2023 that we saw for deal markets. I think 24 has been a much better year, where I think corporate India's appetite for growth and inorganic expansion continues to be high, both in terms of domestic M&A activity and also on the cross-border side. I think outbound is something that really stands out, with about 50% increase in volumes on domestic M&A, doubling of volumes on cross-border outbound. I think some very clear, interesting themes playing out there. And also on the private equity side, and that's a segment which has seen very stiff competition from public markets with the surge in IPOs and new public market listings that we've seen. But despite that, I think the private equity trades have also held up, very consistent across all quarters, and are looking strong in terms of pipeline for Q4 as well. But at the same time, also I think some interesting themes there lined up for Q4, where I think Indian corporates will continue to buy for capability, for filling in the capability gaps, versus just to buy for scaling up and bulking up their positions or for consolidation. That's, I think, one theme which is likely to continue into Q4. And also on the private equity side, we are likely to see more control deals, more buyout deals, more platform deals. In fact, an interesting publication that GT Bharat has, we call it the Fourth Wheel publication, which tracks the financial sponsor activity. And one of the recent surveys that we did there very clearly talks about 86% of those investors on the street expecting far more increased allocations for the country in the coming times. And 48% of these investors foresee an exceptional activity for Q4 and beyond. So I think overall belief in the Indian corporates to create value continues to be strong.
Well, the expectations on one side, the activity is on the other side, because yesterday we heard from, notable investors looking to trim their positions in India as well, peak XV, and we also have Chris Wood looking to reduce their exposure to India. I wanted to ask you, Sumeet, is there anything underlying which this data is perhaps unable to capture also? Because while the activity has been high, the volumes have been high, they've also been fat-tailed by a couple of things. One, Zepto, the kind of fundraise that it has been doing over the last few quarters, that's one. Second one is Bharti Enterprises acquiring 25% stake in British Telecom. That's a one-off. It's a $4 billion deal. And then you had about 8, acquisitions made by Nazara Tech. If you take those off, which, one may think of as non-recurring in nature, then does this hold up in terms of a trend?
So, Mangalam, I think one of the other things which also needs to be seen in conjunction here is how are some of the other sectors playing out. I think the unicorns are back in flavor. The trades in early stage businesses, startup ecosystem have gone up considerably. Consumer and retail, for example, we saw volumes of over 100 deals in this quarter. Technology, which is IT and ITCS, saw close to about 80 deals there. BFSI, again, a sector in motion with seeing a lot of investor activity and M&A, about 60 plus deals there. So some of the larger deals that you're speaking about, I think some of those outliers have existed across all quarters. And even in previous years where we've seen activity surging to excess of $120 billion in overall values, which have been I think the highest recorded values for the deal street, even those have been characterized by a few outlying large big ticket platform level acquisitions and trades. So these are themes which continue to play out. But in addition to this, I think some of the sectors, and within those sectors also, there are certain sub-segment themes which are gaining traction. For example, manufacturing, there is high value added manufacturing is seeing a lot of action in spaces like aerospace, in defense, areas of agri. These are spaces which historically haven't seen that level of deal activity, but things which are coming out quite significantly in the last couple of quarters. For example, aerospace and defense saw like 46 deals, if I have my numbers right, for the YTD 9 months of this year. So I think overall a mixed bag. The outlook in terms of the deal activity continues, and even the pipeline that we are seeing from private equity investors and the kind of platform transactions that are being put in play and that are being constructed as we speak continues to be quite strong.
Okay. Well, these are these interesting sectors that you did speak about: manufacturing, defense, agri. Is the deal activity the maximum within those sectors? Where are you seeing deal activity take place in terms of sector-wise, probably towards the close of the year and going into next year as well?
Yes, so Ekta, I'd like to break that into two parts: activity in terms of volumes and activity in terms of value. Volumes, as I said, with unicorns back in flavor, we are seeing volumes go up in consumer-oriented spaces, e-commerce, startups, healthcare, which is seeing a lot of volumes, and we'll continue to see that kind of traction. On values, I think some big ticket transactions lined up in sectors in energy, particularly renewables, infra, and some of these private equity backed consolidation control deal platforms are spaces where we see increased level of values being contributed to the deal market.
All right, and final question then. We didn't see a lot of activity in the third quarter in the infra space, the manufacturing space. Do you think that's returning?
Manufacturing, as I said, the themes are around value-added manufacturing. And infra, as I said, there are deals in pipeline which will hopefully see the light of the day and closures. There is a market dislocation on pricing which public market valuations have created, which has emerged as one of the concerns also in that fourth wheel survey that I was talking about from the financial services sponsors community. But I think that some of those trades will hold up, and we will start seeing more action in private equity-backed positions in manufacturing and infra buyouts.
Okay, all right, Sumeet, we're going to leave it on that note. Pleasure speaking with you. Thanks very much for joining in and talking to us. We need to take a short break. More on the markets once we're back. Stay tuned.